The biggest story of the day, Trump administration imposing tariffs for steel and aluminium imports on Canada, Mexico and the European Union. Let's bring on board Helen Lau, analyst metals and minings research with Argonaut Securities on the show. Hi Helen, thanks a lot for coming on board. To start with, President Trump has been trying to ring in concessions by threatening to impose these tariffs for a long time, but was the quantum on expected lines? And also they have been in talks with EU for a very long time negotiating these tariffs, but this has come in as a bit of a shock and a disappointment to the European countries, especially the UK has also given out a statement. So were you also expecting this to happen, especially given the background that they were in talks with the European countries?
No, it is also a surprise to me, and we thought, probably they will have a deal through negotiations. However, it seems that the U.S. has not much patience to go further, and so therefore this is a surprise to us and to market as well.
Okay, and this is something that's essentially flagged off a tariff war, because now with these tariffs being implemented, the reprieve of exemption now being lifted, it's for certain that there will be a possibility that Europe, that Mexico, Canada in particular is definitely going to come out with retaliatory measures. But I want to talk about, of course, what happens to the steel market, to to the aluminium market, because for one, Canada does provide a meaty chunk of steel to the US. We have almost about 16% of the imports going from the Canada to the United States. How exactly do such tariffs change the steel supply-demand dynamics, the pricing environment as well?
Okay, so firstly, the total import from U.S. in 2017 was only 38 million tons. We're talking about the steel. And for aluminium, it is also a lot less. And but basically, let's talk about the steel. And if the tariff on the steel tariff on imports from Canada, Mexico, and EU will account for around 30% of the U.S. Steel imports. So that will be around 10 million tons. So this 10 million tons of steel will have to go to elsewhere. And so given that, so far China's, as you know, China accounts for around total 50% of the global steel market, and China does not, export much and also does not import much. So these 10 million tons of steel products have to go to somewhere, and because a lot of steel products that are produced from EU and Canada and Mexico, actually in terms of their pricing, it's not really competitive, right? Comparing to the steel, because of the high labor cost and high production cost, etc. So basically, these countries have to lower their prices in order to get this extra the steel exported. So basically, there's 10 million tons of extra steel that has to be digested by the rest of the world. So therefore, I think the overall, comparing to around 1.5 billion tons of steel market globally, it is still relatively small, right? And so therefore, we think that the big impact, the impact on the supply and the demand fundamentals globally will have not a big impact. But however, there may be some indirect impact, because of there's for example, they see imports tariff will eventually lead to higher inflation in the U.S., and the U.S. will then hike the interest rates faster and U.S. dollar go stronger, then this will have some impact on the emerging markets, will lead to slowdown in the global economy. So that will eventually have some impact on the global steel demand. So over longer term, we do expect to see, this potential impact on the global economy will have some impact on the demand side of steel, and so that is some concern, not in this that is some concern over longer term that we have so far.
It's a very interesting perspective. So basically, Helen, on a net basis, you're just talking about maybe 10 million tons more that the rest of the world would have to absorb on account of these tariffs. My other question is, as a percentage of, the world demand, world consumption, how much of it comes from the U.S.?
You mean the U.S., right? Oh, U.S. is account for not very big. I think the total demand from the U.S. is around 10 to 20%, and around maybe just around 10 less than 20%.
All right, Helen, we'll leave it on that note. Thanks much for joining in with your important insights for what could be the reasons and how the impact could actually play out over markets.